Bitcoin is currently sitting at 105,000, and in this video, we'll dive into key on-chain metrics and indicators to evaluate where Bitcoin's price might be heading and assess the overall health of the market. The goal is to pack as much value as possible into this update in the shortest time possible. So let's get started. First, let's look at the macro on-chain metrics and their risk scores. Starting with the color-coded Bitcoin risk metric, we're currently sitting at 55% risk, firmly in the green zone, and showing no signs of overheating. This is the same as last week, meaning there's still plenty of room for upside in this cycle. Next, we have the top and bottom indicator, which combines several crucial on-chain metrics. It's currently at 65% risk and in the dark orange band, signaling we're still a safe distance from the cycle top. Currently, no on-chain top signals are printing for this metric. Now onto the Bitcoin power law model. It tracks Bitcoin's price relative to its historical growth curve, and we're still in fair value territory here with a risk level of 63%. Next, let's check the CBBI Index, a composite that blends on-chain data with technical analysis. This is sitting at 80%, slightly closer to the top compared to other metrics. While it's higher, it's still not flashing warning signals. Another key metric is the Bitcoin Cycle Extremes Oscillator. It tracks where we are in the emotional cycle of the market, from fear to euphoria. It indicates that we're not yet in the euphoric stage of the bull market, a critical point to keep in mind as we monitor for any signs of excessive greed. Finally, let's look at the CoinGlass bull market peak signals. This tool monitors multiple top indicators to assess whether we're nearing the peak. None of these have triggered yet, and the model is recommending a 100% hold position for now. So, with Bitcoin sitting at 105k, the composite on-chain metrics suggest we're between 55% and 65% of the way toward the cycle top, with the CBBI leaning higher at 80%. For perspective, the highest risk levels of these metrics are estimated to occur between 186,000 and 219,000, so we've got significant room to run if the market continues its upward momentum. Let's move on to some additional metrics that provide further insights into the market's dynamics. The Bitcoin liquidation heat map highlights areas where leveraged positions are likely to get liquidated if the price moves against them, with the most heated zones sitting at 107,000 and 98,000 currently. Large traders or whales tend to target these high liquidity zones and execute massive trades that often trigger mass liquidations and reverse the price after the liquidity has been tapped. If you're a short-term trader, these zones can help you spot potential support and resistance levels, or even price reversals. On the exchanges, trading activity remains robust. In January alone, we've seen over $1.5 trillion in trading volume, nearly matching the peaks of the 2021 bull market. At the same time, the balance of Bitcoin on exchanges continues to decline, now down to just 2.18 million BTC. This decreasing supply on exchanges suggests that more investors are moving their coins to cold storage, reducing the available supply for trading. Not all these Bitcoin holders are sellers. Some are simply holding their coins on the exchanges. General crypto sentiment can be measured by the Fear and Greed Index, which is currently at 60, placing it in the greed category. This is slightly down from 66 yesterday, but up from 57 last week, showing a consistent increase in bullish sentiment over time. Now, turning to the cryptocurrency heat map, this week's performance shows Bitcoin up over 5%, Ethereum up 2.5%, and the standout winner, Solana, soaring by more than 25%. Next, let's take a look at the Bitcoin monthly returns chart. As of January, we're up 12%, significantly outperforming the average monthly return of around 4%. Historically, February has also been a strong month for Bitcoin, with positive returns typically following suit. Bitcoin dominance has been steadily climbing, now sitting at 55% of the total crypto market cap. This trend is being driven by Bitcoin's strong fundamentals and increasing institutional adoption. Historically, rising dominance often leads to a Bitcoin led rally before altcoins start catching up. The altcoin season indicator is currently at 51, meaning we're in a neutral zone. Not quite Bitcoin season, but not altcoin season either. For those unfamiliar, altcoin season occurs when 75% of the top 50 coins outperform Bitcoin over the last 90 days. If this metric trends upward, we could see significant altcoin gains in the coming weeks. Another interesting indicator is the Coinbase App Store ranking, which is a proxy for retail interest. It's now at number 28 among all apps, up dramatically from number 158 just days ago. This signals a renewed wave of retail engagement, often a bullish sign during market uptrends. If this reaches number one on the App Store, take note, as this will be at peak retail FOMO. One of the biggest drivers of Bitcoin's recent rally has been the impact of ETFs. Over the past 10 days alone, ETFs have recorded $1.8 billion in inflows, pushing total ETF holdings to 1.2 million Bitcoin. That's 5.7% of all Bitcoin that will ever exist. Another major player is MicroStrategy, which continues to accumulate Bitcoin aggressively. Their treasury holdings have now reached 446,000 Bitcoin, with an average cost basis of $62,000 per coin. This relentless buying pressure is helping to tighten Bitcoin's supply even further. Finally, let's talk about Bitcoin's potential short-term direction. Funding rates have been extremely positive in recent days. For those unfamiliar, positive funding rates mean traders are paying a premium to hold long positions, which reflects bullish sentiment. However, when funding rates remain high for too long, it can signal over-leverage in the market, increasing the likelihood of a short-term correction. The short-term holder MVRV indicates that we're neither overheated nor undervalued at the moment. The average cost basis of recently accumulated Bitcoin is sitting at $89,000. Historically, during bull markets, Bitcoin often retraces to test this level, causing pain for short-term holders before resuming its upward trend. Right now, the MVRV is trending upward, which could be an early signal of renewed bullish momentum. To wrap things up, Bitcoin's current position is strong, with our key on-chain risk metrics showing moderate risk in the 55 to 65% range. The CBBI is slightly higher at 80%, hinting at a more advanced stage of the bull market, but still far from a peak. Supply dynamics remain bullish, with ETFs and MicroStrategy collectively holding over 1.6 million BTC, accounting for approximately 7.6% of the total supply. Exchange balances continue to decline, while retail engagement grows, reflected in the rising Coinbase App Store ranking and strong trading volumes nearing 2021 peaks. Sentiment is in greed territory, and positive funding rates signal bullish sentiment. However, over-leverage could cause short-term corrections, with $89,000 as a key MVRV level to watch. As always, have a clear plan for both upward and downward moves in the market, and stick to it no matter what happens.